0, 1, 2, 3, 4. What's your take on rate cuts this year?
I still think the Fed's cutting rates this year. I think they probably start in July as opposed to June. So in that respect, I think all today's unfortunate inflation report does is push the Fed off by a month. Ultimately, we had three really bad months of underlying inflation to start the year. We're gonna need that many to kind of undo the damage, right? So I think that means the earliest the Fed can go is July, and I think 2 is probably a reasonable baseline, for the year.
Well, to quote the poet philosopher Forrest Gump, I'm not a smart man, but here's my thing, Neil, which is, why are we even talking about rate cuts when inflation is reaccelerating? Inflation is going up, not down in the medium term. Yes, it's down from 21 and 22. Why are we even talking about rate cuts?
Well, ultimately, I think it's taking the totality of the data, Brian. The Fed doesn't want to overstay its welcome with rates either. And so I think that's important to keep in the back of your mind. At the end of the day, the unemployment rate is up a little bit from where it was last year. And core inflation has declined. You put that into a standard kind of policy rule type of equation, and it would suggest that the rates should come down. Not a lot, not right away, but they should come down. And I think that's just important to keep in mind.
But is there, Neil, okay, I hear your points. And again, we'll get this PC number. Maybe it'll be cool. And then suddenly we'll be talking about, once again, how many rate cuts there's going to be. If there's going to be a day where I don't talk about the Federal Reserve, I might just retire. It'd be the best day of my life. That said, if we get your rate cuts, let's say it happens, could that then reaccelerate the economy and add to the inflationary forces?
Well, that's always a possibility. But again, the Fed ultimately, Brian, it all comes down to the trajectory of inflation. If inflation continues to come in bad, like it did today, then the Fed won't be cutting at all this year. But at that point, you probably have to worry about what inflation's doing to consumption and what that in turn will do for corporate earnings. That's a separate discussion. But ultimately, the inflation dynamics are going to dictate the timing of the Fed's moves. And so, I think if inflation improves between now and the summer, then the Fed will cut, as they should. If it doesn't, then they won't. So I do think that's just important to keep in mind. There's the Fed's not cutting right now, and as you mentioned, the inflation data are bad. But no, I don't think rate cuts in July are going to reaccelerate inflation right away. There's still a pipeline of disinflation across a number of key areas, in the CPI and PCE data that are still in front of us. So I don't think the relationship is as linear as you're making it out to be.
Okay.